Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today guys we will take a look at the Japanese yen because as we have prepared the update on the British pound yesterday, and there is really not much change in the situation compared to the beginning of the week and compared to our weekly research. So it seems that euro currency as Great British pound doesn't need any update right now. That's why I will take a look at the tactical setup that we have on the Japanese yen. The situation here is very interesting because, as you know, about the Kuroda statement, who just confirmed that Japan will support and continue the easing policy, and that has led to significant rally against the yen. In fact, that speech already has got the name as the Kuroda Halo and Shock. So you can see that this Japanese yen is just going crazy, and market has skyrocketed. It's really breaking any supports and increasing any overbought conditions. But if you take a look at the here we have three confirmations that market really will continue move higher. The first confirmation is, you will take a look at the monthly chart, you'll see that Japanese yen stands right now above the yearly period resistance one. And this tells that as market has broken through the yearly period resistance one, it means that the previous trend down has been broken, and very probable that the market will continue move higher. Another confirmation comes from the daily chart. So you see that market has completed this A, B, C, D pattern, but the CD leg is extremely faster than the AB. It means that if any retracement will happen, after this retracement, market will continue to move higher to the next target. And the final moment is right here. So I have drawn this DOS indicator, so that is the trended oscillator, and it points that market extremely overbought. So probably we could trade it as the volatility breakout, because if you contract the chart, you'll see that that is the most significant overbought on the Japanese yen within the long trading period. Even we could say that within the old data that could be provided by this Alpari UK of the trading on the Japanese yen. So just contracting the chart, and we will get no high level here. So you can see that even here market was not as overbought as right here. And if we will shift market to the left, move the chart to the left, I just fixed this overbought condition. You'll see that market never has reached this level of overbought within the history of the trading on the Japanese yen. So that is the greatest overbought condition right now, and maybe we could treat it as volatility breakout on the daily chart. And the major idea of this pattern is that it suggests that after this pattern has been completed, market should show some retracement down. Maybe this retracement will be deep, and after that it should get at least the 618 extension of the whole volatility breakout swing to the upside. That also confirms the possible upside continuation. But right now, since this continuation mostly stands in the medium term or long term perspective, but right now we will talk on the tactical issues that could be useful in the short term trading. And from that standpoint, this situation is interesting because market could turn to the retracement. Why? Because the Kuroda shock right now is gone to history, and it has happened. Market has shown reaction on it. On the current week, we will get the European Central Bank meeting, we will get the non-farm payrolls release, and maybe market could take some relief as the result of shock, as the result of the possible preparation and consolidation for new data that will be released on the current week. Besides, from the technical point of view, market stands at overbought on the monthly chart. As we said, market is strongly overbought on the daily chart and stands at the monthly pivot resistance 1. So that could be a sufficient number of points that could lead market to some retracement down. The possible target of this retracement probably will stand somewhere between 110, 111 area, somewhere in this area, because you can see this really strong support cluster, that the fib level, conference support slightly lower, monthly pivot point that has been tested yet, and as you can see, it's previous top. So taking into consideration the strong overbought condition, market really easily could show some retracement down right to this area. On the 4-hour time frame chart, we see that market could form something that looks like the double repo sale. Now market stands in an area of the weekly pivot resistance 1. So you can see that market hasn't finalized any patterns, any reversal patterns yet, and we can't currently take the short position here. But if we would get any reversal patterns, say market will confirm double repo sale, some reversal pattern on the hourly chart will be formed, butterfly, 3-5, head and shoulders, or something of that sort that will confirm existence of the resistance and possible retracement. In this case, we probably could take the scalp short position with the target, as I said, somewhere in 110, 111 area. Besides, you can see that this will be also the weekly pivot point and minimum target of the double repo, since thrust of the double repo has started here, move right here, and 50% minimum target, approximately 111. So this minimum target, but it absolutely doesn't forbid market to show some deeper action. So that's why, due to the reasons that we just have discussed, keep an eye on this development. So here we could get some patterns. For example, as I draw on the hourly chart, that could be the butterfly. It's 1618. Sorry, this is 127. But as I said, market hasn't finalized it yet. That's why it could proceed, for example, to the 1618 extension. Maybe market will form head and shoulders here. Maybe some other patterns will be formed. But that's the moment. Technically, this is really interesting right now because all fundamental factors already have made an impact on the market and step out. And now market stands on its own. And when the market stands on its own, the technical factors start to dominate on the markets, and markets start to show the reaction. Besides, the currency markets is the financial markets, and they very sensitive to the overbought, oversold conditions. They do not like to stand deeply overbought or oversold for a long period compared to commodities markets. They would prefer to correct this uncomfortable situation as soon as possible. That's why, as the shock has happened already, market has made the reaction on the shock. Right now, some relief probably could happen. That's why joining this assumption with the technical existence of the real technical resistance, significant resistance on the Japanese yen, some retracement could happen. So that being said, for those of you guys who is interested with this setup, and maybe for those of you who for whom this setup seems attractive, keep an eye on the reversal patterns. If they will be confirmed, the market starts to move down, maybe a retracement really could happen first on the 4-hour time frame chart and then even on the daily chart. As I said, the most probable target somewhere in this area.